All right. Hello everyone. We face some issues, but again, this is finally we're going to have the session now with GFB Survey and GFB Reports. This video is live and recorded, so you may watch this again later on. So I am Ram, your GFB chair, and for this session, we are going to talk about these topics. So first is introduction and importance of GFB survey and GFB report. Next is GFB chart of accounts and explanation. Third is efficient consolidation on how the general outline of how we can be efficient with our consolidation. And then fourth is GFB reports and finance health dashboard. And then fifth is changes for 1920. So first is that we're going to talk about introduction and importance. So, what are GFB surveys? Surveys is one of GFB's activities to collect data related to financial information of MC data and LC consolidated data, entity status, and other relevant information. This is done every month, as you may know, which is why we have monthly surveys with collection of financial data of the month is within 18 days after month is completed. So, for example, if you're going to hear May 2019 survey, then that means the deadline to submit 2019 survey is by June 18th. It cannot be by May because May haven't finished yet. So that is the main logic about that. So why do we do GFB surveys? So it's three main things. First is accounting standards. Second is global data consolidation. And third is data-driven decisions. So accounting standards, ensuring the accounting activities are being done by entities on a timely and consistent basis. The GFB surveys regulates and optimizes the compliance of the entities for accounting principles and legal checklist. Now, next is global data consolidation, where in global data consolidation, we need to collect all financial data from entities. However, there is a need to consolidate all data in a uniform, understandable, and compact way, which is why, in terms of how we are doing with GFB surveys, we have certain GFB chart of accounts so that it would be a lot easier for us to categorize the differences of the accounts that we all have. As you know, we have 120 entities. That means we have different accounts that we have to follow, like from the government or from the entity. And then GFB chart of accounts is more of a summarized version of those. Now, data-driven decisions, because finance work is mainly based on numbers, as you know, which handles one of the most crucial resources of organization, which is money. Decisions not based on data would put our finance operations at risk due to these assumptions without concrete and historical basis. Now, let's talk briefly about GFB chart of accounts and explanation. So, the basics is that whenever you are booking something into your accounting software, you're booking it into an account, as you know, which is the definition of accounting. You can see accounts as tools that help you to structure the payments that you make and payments that you receive. So, the accounts itself is already a form of structure. You are free to use your own accounts depending on the complexity and needs of your entity, as I mentioned before, as long as there is alignment between your accounts and GFB accounts that is easily identifiable. Now, chart of accounts, this is mainly divided based on financial performance and financial position, which are revenues, costs, assets, liabilities, and equity. Please take note that the full list of chart of accounts is made available in the survey toolbox. By the time that we're going to release the GEW output, we are going to have this chart of accounts as well, or rather the link of the chart of accounts. All right, so first is revenue. Revenue accounts. Now, revenue, here's the thing, because this is something that I believe everyone needs to understand. Um, the revenue accounts or the core revenue that we usually receive as MC or LC is that there is a clear distinction of how it differs. So first is direct exchange revenues. Basically, every revenue that is directly related from your partners and customers to that exchange. So meaning directly received from partners and customers. Revenues coming from OJX customers, ISEC's opportunity provider or enabler. Direct sponsorships for exchange, specific for exchange. Project fees of ICX, as you know that we charge IGV, for example, and revenues based on normal routine of operations. So direct exchange revenues is usually based on how we charge them per pricing. So that is your main basis of direct exchange revenue. Meanwhile, the other one, which is another form of revenue, is entity affiliation fees, internal revenues, or for MC, for an entity, this is usually called as MC fees that LCs pay. So these are revenues based from entity distribution model. Revenue from your LCs is calculated based from distribution model. This includes exchange fees or how much charge LCs per exchange fee out of the whole amount, or fixed fees or how much was the allocated based on the minimum share legislated to be covered with the budget. So now this is because technically this is based from the entity distribution model. That means this is a revenue for the MC only. Now, please take note. Direct exchange revenues is basically revenue that you receive directly from partners and customers. Entity affiliation fees is revenue that you receive from your LC, from which those LCs receive the revenues from their direct exchange revenues from their partners and customers. So you can see that entity affiliation fees is not a direct revenue because it is based on distribution model and it is based from the earning of the LCs. All right. Next is revenue accounts. So this is BD customer relations partnerships, and the other one is sponsorships and donations. So two main differences here is that BD customer relationships and partnership revenues is types of revenues that amplifies exchange indirectly. So this is more on how your partnership with companies, contributions, grants, or however or whichever company where you are selling them a product or portfolio. Meanwhile, sponsorships is monetary supports not exclusive for exchange. So as you can see, the two main difference is BD or partnership revenues are usually revenue sources that is mainly related to how we are operating as um, as an organization or in terms of our operations, but it amplifies more in exchange. Meanwhile, sponsorship and donations are monetary supports not exclusive for exchange. So any kind of revenue that comes from sponsors and donors and funds or events that is not exclusive for exchange but supports on other aspects. So take note, sponsorships and donations is some those that not exclusive for exchange or for whatever our main operations or main products are. Example of this is government donations for special projects or having sponsor for an event that is giving you support financially or non-financially, or simply donations from whoever would like to give. Uh, yeah, the other one is conferences and meetings revenue, national, local, and international. So basically, revenues from local and from our conferences, national, local, international, and which comes from organizing these conferences, summits, and meetings. So if you are record your local conference, national conference, operation summits here, and assuming you are going to host an international summit or meeting, then you have to record it on the international conference and meetings revenues. All right. Then the other three revenue accounts are Youth Speak, local volunteer, and other revenues. So basically, based on their names itself, Youth Speak revenues are revenues all revenues related to Youth Speak itself. Local volunteer are revenues directly related to local volunteer, and other revenues that you cannot categorize based on the revenue accounts that we already mentioned. All right, cost accounts. So as similar to the one earlier in revenue, so direct exchange costs are costs directly related to the to each of the operations products. So costs are spent for preparation, organization, delivery of exchanges. For example, accommodations, traveling costs, promos, and marketing. B2B, B2C marketing includes here as well if it's specific for each product, IPS, OPS, standards delivery, etc. Then the other one is for in terms of entity affiliation fees, there are technically two types. So entity affiliation fee internal for LCs, meaning these are costs that LCs pay towards the MC. So it is a cost for them. So which is based on the entity distribution model. Meanwhile, entity affiliation fee external is for MCs paying to AI or for to AP regarding global and regional fees. That is calculated based from distribution model or global distribution model or regional distribution model. So this is recorded under MC. So basically, if the entity affiliation fee for just within is just based on national distribution model, then it is an LC payment towards MC fees. Then if it's based on global or regional distribution model, then it is an MC payment towards AI or regional office. All right. The other one is something similar to what I mentioned before. So BD, partnership costs, then PR costs. Now the two main difference here is that the BTCR partnership cost is more specific to uh, to as more specific or identified to a certain partnership or partner. Meanwhile, PR cost is pretty much in more general and broader view with no specific partnerships. So as you can see, BD partnership and costs are such as marketing costs, costs connected to partnership delivery projects, costs connected to synergy cooperation agreements, etc. While PR costs are those costs such as fee for external events, cost for posting, cost for prints, publications, AIESEC's logo, and vision in a newspaper outside of YouSpeaks forum. So it's mainly so PR cost is more of a generic, broader cost that we want to market ourselves with no specific partner itself. But BDP, CR, partnership costs uh, are mainly those is easily identified on certain partnerships that you have or certain targets or certain goal that is specifically for partnership development operations. All right. So conferences and meetings, national, local, and then international. So basically, cost connected in terms of organizing them. So venue, food, logistics, travels, merchandise would all go here. Just identify if it's local or national or international. Then, if you wanted to subsidize delegates to join AIESEC conference to national, local, or AIESEC conference abroad, then you also have to write it down here. Now, please do not include money which just passes through an account. So, for example, a member from an LC the MC pays the MC so that the MC can pay that fee to uh, to to another entity. For example, if it is an international conference, then in that case, do not record it. Is because it's basically just acting as a bank. Yeah. This could happen an if it's an IC and then an LCP is subsidized by its own LC, and then but the in terms of the payment and transfers, it needs to happen, let's say through AI or something. So that means like any money that somehow just passes through and just uses the MC account as a bank, don't include it here. All right. Cost accounts. So overhead costs, office, HR, and legality. So basically costs for office, costs for HR, and costs for legalities. And then overhead costs, national conference and traveling, overhead costs, international conferences, traveling, and visa. So costs for national and local conferences. So costs which ensure that AIESEC can do operation in entity. For example, travel costs of delegates of our entity, and then the other one is costs for international conferences, costs which ensure ISEC can do operations in entity. So flights, investment, flight tickets, and visa. So the main difference here is that the one for the conference costs only if you are subsidizing a delegate is mainly for delegate fees. Meanwhile, for overhead costs is mainly for travel costs itself. Uh, if you are subsidizing certain people, okay. All right. And then the other cost is use speak, local volunteer, and other cost. All right, next is asset accounts. So bank account and petty cash. So basically money inside your bank account and money inside your cash box that can be easily used for daily routine of operations. Next are long-term assets, which are long-term assets of properties, meaning monetary value of your property, such as if you own office buildings or flats, meaning you're not one of those who rent, but rather you own an office or a building. Long-term assets, reserves, money inside your cash box, money in all savings bank accounts, or bank accounts you use to build up savings with no intention for for daily use or and more emergencies. Financial property now, this is one of those accounts where only few MCs or LCs are smart enough to invest on this, because these are stocks, bonds, or any other financial complex assets that you own for more than 12 months. This is usually can't be easily withdraw or liquidate. So financial properties. Then long-term assets are those that are not mentioned on the items above. Um, such as physical or intangible. So these are equipments like projector or chairs or tables, furnitures and fixtures, trademark, which is technically an intangible asset. Then long-term receivables, internal and external. So basically internal are receivables just within the entity. So meaning if an LC owes money to another LC, or LC owes money to another MC. Same goes with long-term receivable, but this is specifically for where the entity owing money to uh, to another company or a partner or external, or owing to an AIESEC entity outside the country. So asset accounts of short-term similar as to the thing that I mentioned before, but only less than 12 months. So liabilities and equity. So equity is basically assets minus liabilities, which is entity's net worth. So if we are going to ask how much is the value of your entity, then look at equity. Do not answer it based on assets or liabilities, because there are entities where they have very, very, very high assets, but also high liabilities. So that means technically their assets is not their value. It should be equity. So you need to look at the equity. And this is important because we base equity as in terms of the mass of financial reserves ratio calculation, and equity is usually the one that we base more on in terms of the financial value of the entity itself. All right, liabilities account. This is similar to the one that I mentioned before, but only on reverse, which is payable, wherein you as an entity needs to pay either LCs or MC internally, or needs to pay another partner, external, or AIESEC entities outside the country. Then next is another something similar as well, but only for short term, meaning less than 12 months. All right, understanding GFB codes. I'm not sure if you noticed these numbers, but hopefully you do. So basically, if you're going to look at it, there are four main spaces. So there's the unique code, which is the first one. GFB code is on the second one. then there are those two symbols or letters. If it's A, L, C, or R, that means it's an asset, liability, cost, or revenue. That's why they are those letters, I mean. And then if on the end it says MC or LC, then it is for MC or LC. In terms of the GFB survey right now, usually at the end part of it, it includes an ISO code, which is basically your country code. For example, if it's Philippines, it's PHL, or if it's Brazil, it's BRA, etc. All right, efficient consolidation. Now, the thing right now, there is a need to have to have a faster data processing and consolidation. And this would mean that we need to make ourselves a lot faster so that we can put more effort and more focus on everything else that is more important. So how to consolidate faster? First, set up your accounting software. If you do not have an accounting software, um, it's been a long time that we've been promoting this. So please set up an accounting software. If you don't, please inform GFB so that we can help you out. Review your chart of accounts and GFB chart of accounts. As I mentioned, because every entity has their own chart of accounts, um, they are not necessarily the same to GFB chart of accounts. From your chart of accounts, identify which of your accounts align to the description from GFB accounts. If you're confused, consult GFB. When you're done with reporting periods, meaning every month, when you're done on a month, export it to Excel, depending of whichever tool fits you best. Then combine all data together using different Excel functions that fits best. So you can use VLOOKUP or some ifs or addition, subtractions, multiplication, etc. It depends on you. Better if you already made your own consolidation tool for easy processing, meaning that the only thing you need to do is basically just copy paste the data that you receive from your accounting software. Then fill out survey and submit. Now, change to values if you calculated your data through formulas. So please, if you use Excel and then if you have results based on based on a formula, please just copy paste the value. Okay. Use this format always, which is 1, 2, 3. This is a type of a numerical format wherein you use comma for separation of thousands and millions. Then you use period for separation of decimal points or cents. Yeah. Then remove any currency symbols. Please do not put any currency symbol. There's a reason why in the Excel data we asked for what is your currency. Do not put any currency symbols because there, for example, if you're going to write down a dollar, there are multiple countries that uses the word dollar, but not all of them have the same rates. Yeah. All right. Now, what can you do faster? So first, embed in your own calendar routine for daily, weekly, monthly accounting. I suggest that you have at least 1 hour, maybe if not at least, it can be at most 1 hour in a day just to check out your accounting. And then embed in your calendar schedules to work on MC data consolidation. Also, ensure to coordinate with your LCs regarding their LC data accounting and consolidation. So you may add NST for GFB survey consolidation. I actually suggest for you to have an NST to help you out with GFB survey consolidation, LC data consolidation, so that it's a lot more easier for you to have a helper, for you to have a helper that assisting you with data consolidation. Put in your compendium deadlines for LC data submissions as well. It's ideal that you have a legislated legal binding in this. Ideally, within 7 days from the end of the previous month, the LCs needs to submit their LC data, so that is a lot faster. Periodically, execute auditing across the entity to always improve your processes. All right, now GFB Reports and Finance Health Dashboard. So Finance Health Dashboard, this is basically the 6 main categories. So we have finance health indices. Then which is indices to evaluate the development of financial process and sustainability. Sustainability subcategories, determining the calculations and weights of priorities with these subcategories in sustainability standard. Ways in finance standards calculation, where in terms of calculating the finance standards, there are different weights. We have global and regional clustering. We have overview. We have network overview. As you know, the finance health dashboard, in terms of its lookup, um, it is very there are multiple tabs there, which all relates to the six main idea of the finance health dashboard. Now for the GFB reports, this is also similar to divided into six main categories, which is first summary page, which is basically page one of whatever the results of your financial performance and financial position is. Next is finance standards calculation. This is the tables where it shows the percentages of different finance standards. Next is sustainability levels and trends. So this is more on based on what are the graphs and visualizations of what's happening with your sustainability. Next is exchange performance. So this is also related to approvals and exchange revenue percentage. Then financial indicators and data. So this is more indicators. And then we also added the 1718 data version. Now, if you wanted to learn more into the resources and links, please go to these videos and PowerPoints for more information. I am not going to tackle them today as the resources already made available.